Good morning. It is Monday, July the 6th. Here's what's on the agenda. A mixed start for stocks in a week of major tests for the chip trade. The yen falls with Goldman eyeing 165. And fifth time's a charm, Easyjet agrees in principle to Castlelake's $5.2 billion takeover bid.
OK, Tom, here we go. As you say, massive week for the chip sector. The Kospi choppy session today going into the end of play, down by around 0.5%. We are waiting for Samsung. That's the big next metric we're going to be watching out for. Eurostoxx 50 futures, remember the US was closed Friday, reasonably becalmed this morning. And that Goldman's call, 165 was it, on dollar yen, we're already at 162.05. Dollar yen up by 0.5%. Big week coming. Countdown to the opening trade starts right now.
Good morning, everybody. It's another Monday morning. Have you had a good weekend? Did you watch the football? Have you recovered from the football? Plenty of European teams in action and some great performances over the weekend. European stocks at the end of last week also putting in a really strong performance. But where do we look for leadership today? We're without the US leadership that we would normally have on a Monday morning, of course, from the Friday session. So perhaps we look even more than we have been doing to Asia. Maybe we should have decamped the show to South Korea, to Seoul this morning, because it does seem as if this week we're going to be talking a lot about things happening there. You mentioned the Samsung earnings. They're front and centre for the early part of the week, and we build our way towards the SK Hynix ADR listing in the United States on Friday. So in terms of the tech story, those are some of the stories we're dealing with, but the narrative overnight is a fairly weak Kospi, down, as you said, 0.3%, quite choppy.
Yeah, that feels like a normal day to me on the Kospi.
That's a small move.
Small moves. And so many currents to think about. SK Hynix, what's happening with Samsung? Is China boosting the DRAM story? Is capacity coming? Is this industry still cyclical? We're still grappling with all of these questions. We have no answers.
We're going to get some details, though, and maybe some answers from Samsung. So, of course, their earnings coming through tomorrow. We had Honhai coming through strong with their numbers. Samsung tomorrow, then, the expectation is they come through with profit in the quarter of about $55 billion US. That's 18 times, 18x what they saw a year ago. Will they still see strong pricing? Will they still see strong demand? Or how far are they pushing that out to? Are they still signing long-term contracts? To what extent is that a test? And then, of course, SK Hynix with the ADRs looking to raise $29 billion US, which would be one of the largest international listings, secondary listings, of course, in the US later this week. And
we have our reporting that suggests that South Korea is now considering setting up some kind of sovereign wealth fund to decide what to do with some of the benefits of this AI build-out. And, you know, the same thing we've talked about with oil proceeds, windfalls in the past. Maybe we turn our attention to the tech sector for that focus as well.
Does that mean they tax it more? Kind of how do they get the money? How much money?
Wherever the benefits fall from this boom, how does the state get its hands on some of it, I suppose, is the question.
We'll kind of figure that bit out. But I think it's interesting, the state clearly saying some of that's ours. We want it. We want to take some of the AI dividend that's coming. There's also this NVIDIA story, which is floating around as well this morning in terms of... So the Kyber is the rack. This is the rack for the Ultra Rubin. They're vertically stacked, I think, in the rack, and this is designed to produce some significant benefits, but they're struggling with that system to make it work.
Yes, these are reports suggesting that the Kyber is delayed and by quite a significant period of time. Again, according to reports, but it has led to a sell-off to some of the suppliers to NVIDIA on the back of that reporting. So that is certainly one to watch. It's interesting that Nasdaq futures are still pointing to gains of 0.8%. So there's the catch-up, obviously, as the US comes back, but we'll be watching NVIDIA as well pre-market. As we think about the Korean story, of course, it's also worth noting that the won is now trading 24 hours a day. There hasn't been a huge amount of movement, it seems, in the Korean currency today, but this is about trying to make this obviously a more developed nation kind of trading infrastructure for the Korean won, and to make that market more accessible to foreign buyers and foreign traders. Interestingly, there's been actually about $100 billion worth of outflows from Korean stocks by international foreign buyers. So we continue to watch the won, which of course has been weak as a result largely of the high energy costs, even as there's been this significant enthusiasm for the equity markets and the stocks of South Korea.
It's sometimes amazing to think about the countries and their companies that we talk about them so often. They don't have developed market status. weakness on some metrics, and that is what this is all about as well. Should we talk about the yen also, because whilst we're in Asia and thinking about FX moves and how they are moving us around, interesting to think about the yen because Goldman Sachs has lowered their yen forecast. 165 is where they see it against the dollar. This, of course, has a number of drivers. Part of it is dollar related, so if we're higher for longer on US rates, then what does that mean for the dollar yen trade? But also yen related, fiscal concerns and a very, very gradual interest rate hiking cycle seem to be in the minds of the Goldman team. And we'll talk to the Goldman team later on this hour.
There's a slight tone shift around the dollar, though. The minutes are going to be really interesting this week to see exactly what's happening with Walsh. If the committee is signalling that it's coming out hawkishly, if the next meeting delivers a hawkish tone, what does Trump do about that? Does he get Walsh's back? Does he push the rest of the committee hard?
Yeah.
You look at front-end pricing just beginning to move a little bit on the rate story.
Well, and the jobs report being as weak as it was, has many people asking, well, did we overdo the hawkishness and the hawkish interpretation of Walsh? Are we ever going to see these hikes actually delivered?
So the minutes come through, the FOMC minutes for the month of June come through on Wednesday, and then you have CPI inflation next week as well, which will be additional detail around that story.
Yeah, and in theory, that's what Walsh is pointing us towards in terms of what is happening. But you are seeing break-evens coming down a little bit. Let's talk about Easyjet. Let's talk about a corporate story. We don't have to do that at this time of the day, so interesting to talk about one. Easyjet. Looks like Castlelake out of Minneapolis is going to be acquiring Easyjet. We're not there yet. The put-up or shut-up has basically been pushed forward into August. But we now have effectively what looks like a deal somewhere around $690. That's obviously a significant uplift on where the price is now. If it opens at that price, it'll be up by 24%. It won't open at that price. I'd be very surprised if it does. The market will put some, the arbitrage teams will be definitely putting some kind of expectation that this doesn't go through because there are reasonable risks around it. The main one being nationality, but there's all kinds of other factors that you need to bear in mind here as well. And we're still waiting for details on exactly how ultimately Castlelake will get round that issue in terms of making the acquisition stick with EU nationals in the majority. Mark Breen, Peter Bellin are involved. How far does that take them? Is that going to be enough? What happens with the Stelios stake? There's lots of things going on around this. Anyway, basically, Easyjet looks like it could be broken up. The holiday business could be taken off, hived off. Is that going to be enough? What happens in terms of some of the slots? What happens with some of the aircraft? Anyway, so we're waiting to see what happens. Obviously, this all started with the profit warnings, which you basically can see at the beginning of this year on that chart. And our reporting pointing out the assets as you talk about the potential breaking up of EasyJet. So the assets including 356 Airbus A320s, an order book of 287 planes, an additional option to buy, purchase rights of another 100 jets, those prime landing slots, of course, in London, Milan and Geneva. It's just some of the assets that Castlelake and its partners will be no doubt looking at as well.
Let's talk about some other news for UK PLC. We've got ITV selling its media and entertainment unit to Sky for up to £1.6 billion. So we'll watch what this does to the ITV share price at the start of the trading day in around an hour's time. The media and entertainment business is the commercial streaming part of the broadcaster in the UK, it would seem. So that is going to be something interesting to unpack.
But this is part of... How does this relate to the Comcast breakup as well in terms of what it's doing? Because obviously this gets fed into that kind of bigger group. So it's going to be part of that narrative that we're seeing a bulking up maybe of that. So you feed into the US media narrative with this acquisition as well. Let's tell you what we've got coming up on the show. We're going to be talking about lots of the stories we've already discussed. Kamakshar Trivedi is going to be joining us, Goldman Sachs Chief FX and Emerging Market Strategist, Obe Ejikeme, Carmagnac's Global Equities Fund Manager, Emily Turner, HSBC Innovation Banking UK CEO, talking about the tech landscape and how fast it is evolving here in the UK.
Here's what else we are watching and will be watching throughout this week. Then later today, the British Chambers of Commerce, their quarterly economic survey will come out on Tuesday. It is the NATO summit starting in Ankara. President Trump will be on his way, of course. The Paris court ruling of the appeal ruling in Marine Le Pen's trial could be very significant as we think about the election year, of course, next year, 2027, presidential election year in France. Samsung earnings come out as well. And on Wednesday, UniCredit will announce the results of its extended tender offer for Commerzbank. On Thursday, EU finance ministers meet in Brussels and the UK Prime Minister. Nominations open with, at least at this point, only one name on the docket. And on Friday, SK Hynix makes that Wall Street debut, as we were discussing.
Should we think about NATO? This is going to be a big, in the background, conversation taking place through the week. Kicks off in earnest tomorrow, doesn't it? But we have President Trump going to meet Erdogan. Does that set the stage? He's meeting somebody he has a lot of common ground with. Is that going to be something that sets the stage for the event? Then he goes on to meet Zelenskyy, somebody perhaps perhaps he has not got on with always in the past. Will success for the Europeans just look like, what will success look like? Is it just something that we don't have any further falling out? Or is it just if the US continues to make its demands that Europe spends more on its defence, is that okay? That's what Europe is ready for? And they just don't want any further deterioration in relationships?
You'd expect Trump to push pretty hard and that tension to continue to be a real part of the landscape. And then you feed that into what that means for defence stocks. Europe clearly is thinking about how to divorce itself from the US kind of industrial machine.
Yeah.
How does it do it domestically? How quickly does that happen? What does that mean for the big primes in the United States? That is the underlying conversation that is going on sort of around all of this. Can Europe rebuild its defence infrastructure but do it without the United States? And I think that is going to be the challenge that we are watching.
Coming up on the programme then, signs of oil flows recovering in the Strait of Hormuz a day after several vessels performed unexpected U-turns. We will have the details, plus uproar at the World Cup after FIFA clears a suspended US star to play following a personal appeal by President Trump. More on that shortly. Up next, we will be joined by Tim Graff, who will be with us from State Street, EMEA Macro Strategy Head. If you have any questions, if you want to get involved in these conversations this Monday or any day, IB plus BBTV Go. That's the function on the Bloomberg terminal. This is Bloomberg. This is the opening trade, 7:14 here in London, and the European futures picture looks, flat to negative, I guess you'd say. But we did quite nicely, thank you, on Friday. European stocks at a new all-time high. Where are we looking for direction today? Well, over to Asia, because chip stocks in South Korea have been whipsawing ahead of a crucial week for tech investors. Samsung is set to report preliminary earnings tomorrow, while SK Hynix is seeking to raise $29 billion in an ADR listing on Friday. For more, let's talk to Bloomberg's Anthony Stevens in Hong Kong. Anthony, it is going to be a big week. We're all here in Europe going to be tracking all of these Asia tech stories, of course, through the week. So we get Samsung earnings. Take us into SK Hynix, though, because there's an ADR listing due on Friday. Do you think this risks telling us something about being closer to the peak than a trough in this particular story around memory and around AI?
Well, history suggests that it could be the case. Hynix is not one of these companies that really needs an ADR. It already does have GDRs, actually, that are listed on your side of the world, that are loosely traded on screen, but people can market make in them. Also, the Hynix next trade session extends quite a fair bit into London. And obviously, in the local market, it's an extremely liquid stock. Not as liquid as Micron, perhaps, but quite liquid. So it is a very opportunistic fundraise. There are pools of the US liquidity that are not available to Korean issuers, namely US retail, obviously, but also domestic US money that is mandated to only use US stocks, so hold US stocks. So that's quite a powerful incentive for them to go there. Now, what's driving some of that search for liquidity is this massive capex that both Samsung and Hynix are planning on doing. That's around $200 billion in just the southeast of Korea alone. And this comes at a time where Samsung is being able to raise prices. They've raised prices approximately 20%, according to reporting. It's also coming at a time of Micron expanding supply. They broke ground on their factory in Japan. So this is a very complicated supply chain dynamic that is raising a lot of capital alongside. So that's why the market is so whippy. There's a huge debate that's going along. Is this capex coming at the wrong time and the wrong place in the memory cycle, as it has done so often before? If memory does turn out to be cyclical and not structural, this investment seems to be ill-timed. On the other side of things, we continue to see these kind of problems with capacity coming online in the GPU and LLM space. So you guys were talking about the NVIDIA rack that may be delayed. Now that is hitting stocks very hard in Japan. You have the MLCC space, the SPE space in Japan and Taiwan that is down anywhere from 8 to 9%. It's not really showing on the headline index, but there is quite a bit of pain underneath headline Asian indices. One reason for the lack of pain is the rotation on everything else. So industrials in Asia are doing quite well, and this is kind of ironically because the defense industry is gearing up for more macroeconomic volatility. So Korea and Japan are both restructuring their militaries mostly along the lines of improving their navies, and that's got heavy machinery, heavy engineering up a lot. So we have Mitsubishi Heavy, Kawasaki Heavy, IHI, Hanwha Systems. These names are all up more than 5% in what is a very choppy, very fast churning tape. Lastly, on the macro, we don't have any peace there either as Korea goes into 24-hour trading and the yen is still on intervention watch as both those countries endure continuing FX weakness. In Korea, it will be fascinating to see whether we can do another day of net foreign selling. We are on our 11th day if foreigners have sold again today, and they already breached the $100 billion outflow mark year to date.
Anthony, complicated but comprehensive. Thank you very much indeed. Anthony Stevens joining us with... It is a very, very complicated picture right now. What do you do with it? How do you trade this? How do you invest in this? More importantly, here to answer that question, Tim Groff, Head of Macro Strategy for EMEA at State Street.
Good morning. There's a lot to unpack there.
There is a lot to unpack.
Yeah,
So what do you do? Genuinely, it's so noisy out there at the moment. Do I just put my fingers in my ears and stick with the tech trade? It seems to be working. I don't see obvious answers.
Basically, yes. The word he said that I think is the key word right now is rotation. So literally everybody knows tech stocks are crowded and expensive. Yeah. Fine. But they are still earnings juggernauts. And the fact that you still have rotation, I think, is the sign of a healthier or a healthy market, right? When tech pulls back, you get some rotation into what earlier this year was energy, obviously. He was talking about industrials. And what you don't want is you sell tech, but you also sell everything else. That higher correlation environment at either a single stock or a sector level, that's where you get these dangerous turns in markets. To get that, you really need sentiment to pull back. So we of course, track sentiment quite a lot using daily flow data. And so far, what you see is at worst neutral sentiment. And in fact, right now, today, it's slightly positive. And so it's not to say people are necessarily chasing returns. And especially in IT, actually, there's an interesting rotation story going on within it, insofar as you are seeing a little bit of a rotation away from hardware. Actually, a strong rotation away from Korea, as you mentioned.
Yep.
You're seeing it go into software, though, which got completely cleaned out earlier this year. The depositioning from the SaaS apocalypse took software holdings to their lowest level in 5 years. And that's where you're seeing rotation into right now. But you'll see it rotate back, probably assuming the broader narrative and the broader sentiment story stays positive.
How much leverage is there?
Within what I'm talking about is strictly real money. Okay. So there's no leverage there, right? There's very little leverage being taken.
How much leverage do you think there is in the market?
I don't really know the answer to that. I mean, conditions are, as a consequence of past tightening, probably a little bit tighter. So I don't think it's people over their skis.
That's the question. Yeah.
Let me ask you about FX markets, Tim, and I want to ask about your dollar view, because it seems we priced in some hawkishness on the first big appearance around the FOMC from Kevin Warsh. Yeah. And then last week we started to price in a bit of dovishness on the back of his Sintra appearance, the jobs report. Where are we now in that narrative? What does it do to your dollar expectations?
The dollar is still, again, going back to some of the real money positioning data we have, it's still underowned. I think specs, the price action last week after payrolls especially shows you spec money was probably long of dollars to a pretty extreme degree, because that was not that bad of a payroll report, and the dollar got crushed on the day. So that kind of tells you the point of pain short term was, the positions were overweight. But that's not the case with longer term focused investors. They're still really underweight. And so I think the path of least resistance right now is that the U.S. labor market, as I say, looks absolutely fine. U.S. consumption looks pretty good. Inflation is coming down. So you have this potential real income boost if the labor market stays relatively healthy, that I think carries the U.S. in good stead relative to the rest of the world. So I think it's a continued short to medium term grind higher for the dollar.
Is that, Tim, good morning, is that dollar strength another tailwind for European equities as we look at that rotation?
Yeah, I think it can be. It's certainly on a relative basis they've underperformed the U.S. over the last couple of months, and I think that can potentially help when you get a weaker currency against the dollar and being so sensitive to it. Yeah, I think so.
And in terms of the rotation then, where do we look in Europe to benefit from that? I mean, part of the rotation maybe is into Europe and away from some of the US and heavily played tech names in Asia. So maybe Europe just as a whole continues to benefit. We saw that a bit last week. Is it banks? Is it more cyclicals? What do we think?
The cyclical story I'm a little less confident on, just on kind of the dynamics with energy prices lately, and the sentiment has been dampened somewhat. But there is recovery potential there, I think. In the industrial story, you look at somewhere like you talked earlier about defense spending. Rheinmetall was this classic case of the defense trade last year, and it's gotten absolutely hammered over the last 6 to 12 months. And so perhaps if that remains a story, and it's not kind of my area of expertise, but it is depositioned relative to the U.S. especially. And so I think rest of world stocks maybe have some boost to come.
You talked earlier about sentiment and how that ties into the kind of the relatively healthy dynamics that we're starting to see now as investors kind of reassess particularly how far the hardware stories run. Yeah. What is the potential challenge to that sentiment story? I think in the days and weeks, quarters ahead.
Sure. I think one could come from a hawkish Fed that is hawkish because inflation is getting out of control. And that's the scenario I don't worry about as much, because we all know inflation is about to really fall when we see the official data. It's potentially you start to see some of the tech stories that we've already been talking about. So I don't necessarily worry about this yet because we are talking about it. But the investment spending, maybe being pulled back a little bit. That narrative, it was referred to earlier as the tech story, and that's kind of it. This is a narrative-driven market where anything that dents that narrative. And so far we've had higher debt issuance. Didn't really seem to bother it. You've had IPOs. That's the classic sign of the top in the market. You have a lot of high-profile IPOs. So far that hasn't really dented it. So, it's kind of cliche to say it, but until you really see some of those adding up to really cause a pullback and ultimately crater earnings, that's really what it's all driven on, these earnings expectations that are so elevated. It's a question of rotation as opposed to complete de-risking or degrossing.
Okay, Timothy, thank you very much indeed. Really appreciate it. Thanks for coming in this Monday morning. To kick things off for us, Timothy Graf, Head of Macro Strategy for EMEA at State Street Markets. Guy.
What else do you need to know this Monday morning? Let's get you up to speed. Millions of people have turned out in Iran for the funeral of the late Supreme Leader, Ayatollah Ali Khamenei. He was killed on the first day of the Iran war in February. Some 20 million people are expected to attend the week-long funeral. His casket will be taken through the streets of several holy cities over the next few days before being buried in his home city on Thursday. Germany plans to increase net new borrowing next year by 118 billion euros. Now, that's around 7% more than projected back in April. Sources in the country's finance ministry say the increase reflects weaker tax revenues, higher debt servicing costs, and more funding needed for unemployment benefits. The cabinet is set to approve the 2027 budget today, alongside a package of reforms covering pensions, healthcare, and taxes. And to apparently one of the main subjects we're watching this morning, FIFA has cleared America's star striker, Volodymyr Balogun, to play in tonight's World Cup match against Belgium. This follows a personal appeal by Donald Trump. Now, Bloomberg understands the president phoned the FIFA boss, Gianni Infantino, after Balogun received a red card against Bosnia and Herzegovina. The card comes, in theory, with an automatic one-game ban, which has now been removed. Belgium's team says it is, quote, astonished by FIFA's decision and is reviewing possible options to appeal.
So we got a red card. Wow, what a nail biter! First of all,
yes.
We'll take it. I think collectively, did we watch? I mean, I got about 15 minutes towards the end of England's
that was basically what
Mexico.
felt like 15 minutes of extra time.
Yeah.
I mean, the highlights was enough for me. I don't think I could take a whole, nearly 2 hours of that. That would have been too much.
Started late.
A thriller is the word you're supposed to use to describe these kind of encounters.
In the Azteca.
Beating them in the Azteca at altitude.
On the altitude, the New York Times had a really interesting stat. So sports scientists have worked out that for every 1,000 metres of elevation, it accounts for about half of a goal. And we were 2,200, so England started down 1-0. We got a red card. Let's see if we'll get that.
Productive day in the UK, I think, today.
Yes. South Korea, back in focus for us. FX, stay with us. This is Bloomberg.
Half an hour to go till we start trading here in Europe this Monday morning. At the moment, the futures picture is fairly mixed. To be honest, with the US out Friday, probably not a clean read as to what we are kind of seeing. Well, I think we'll wait for the US to arrive a little bit later on. US futures are positive. NASDAQ futures in particular are positive. But that's kind of off the Thursday session. Overnight, you've seen a bit of choppiness in the Kospi, the main one to watch, plus some of the other big indexes out of Asia. So quite a muddled picture this morning when it comes to equities. Europe's just kind of shrugging its shoulder and waiting to see what happens next.
Yes, I mean, and then on to the bond markets. We do have a bit of US leadership there, don't we? Because we've got US... well, in fact, we've got the European bond market story just opening up, as I should focus on that perhaps. But we've got yields dropping a little bit here in Europe, but not by much. So a bit of appetite there for European debt. And the big story we've been covering this morning, in fact, I think you were talking about it earlier, Guy, Germany planning to increase its net new borrowing for 2027. That's by about 7% more than was projected in April. Doesn't seem to be having a noticeable impact on anyone's appetite for German debt right now. This higher German borrowing then reflecting weaker than expected tax revenue, rising debt servicing costs. So that's the German narrative at this point, not really cutting through to that European bond market.
There's so much going on this week in terms of what could change the narrative. We've obviously had payrolls, which we've got to factor in. Then we've got the story around what is going to be happening with the minutes. The minutes could be really interesting. And I'm really interested to see if you do get a hawkish slant there, and I think you expected you will, how Trump responds to that. Are you going to start seeing pushback from the politicians on this idea that actually there are those on the committee that want rate hikes, and the administration is not going to be happy about that? And are they going to have Walsh's back if Walsh wants to cut? And Walsh will go, you know what, oil prices are coming down, we can maybe take a slightly more benign view of this.
WTI is at 68.95. It's really interesting. I thought Tim Graff from State Street saying that we all know. He said, we all know that inflation is coming down and coming down. I'm paraphrasing this bit, but coming down hard in the US. So we have CPI next week. Do we all know that? Do we all know that inflation is the back of inflation is broken in the US? Clearly, the energy part has. Services, rents, housing, core has been a little stickier. And it was like more than 5 years over that 2% target for the Fed.
So to your question about where the Fed narrative goes then on the back of all of that, I mean, will we look back on this Fed period, the early Walsh period, and say, well, the narrative came out hard. He came out fighting and demonstrating independence. And maybe the purpose of that was around independence and allowing the market to tighten a little to do its work for it, and then end up with none of the hikes that we then priced in, because that's also what we saw in response earlier on in the year to the Bank of England and the ECB being pretty hawkish. The market was quick to price in these hikes that then the market has spent more recent weeks pricing out again. So you wonder where we end up with all of that.
But you have a relatively solid US economy. You still have service sector inflation that is a factor that needs to be borne in mind as well. You have an AI build-out story that, like, you look at the chip inflation rate that we're looking at the moment, and it's an extraordinary. Who was it this morning? I think one of the big chip providers talking about a 20% increase. I'm sure I wrote it down somewhere in terms of where they see prices going next. A 20% DRAM price increase in the next quarter. 20%.
Yeah, on top of the inflation that we've already seen in DRAM, to the point where Apple, of course, as we were talking about last week, is getting so concerned about it. Not only is it putting up prices, but it's looking to suppliers for some of this memory
and to some of that
China
supply
to get
could
the
be in
sign-off
China.
for
Yes,
that.
absolutely. And what does that do to the geopolitics around memory, and what does that do to the pricing around memory is something we'll certainly talk about this week.
And as we think about memory, we think, of course, about what's happening in South Korea and the FX story in South Korea. It should be fascinating because despite, of course, that global strength and global outperformance we've seen in the equity markets of South Korea, the currency has actually performed very badly. The South Korean won. Seesawing today in the session against the dollar on the first day of 24-hour trading, with authorities stepping up surveillance of the currency market. Let's bring in Kamiksha Trivedi, who is Chief FX and Emerging Market Strategist at Goldman Sachs. Kamiksha, thank you very much for your time. Let's start on the won. We want to get your views on the yen as well, of course, and the role that continues to play in the carry trade. But on the won and 24-hour trading dynamics, does it change fundamentally the appetite and the exposure that investors will want to have to that currency? In light of recent weakness, do you see this as a structural and significant change?
I don't think it's a structural change in terms of the exposure that investors want, but it certainly facilitates a kind of broader liquidity hedging processes. And I think that's going to, smooth out some of the volatilities and the jumps that we often saw in the won overnight after, big things have happened in other markets. So I think that's what it does. I don't think it changes the kind of fundamentals overall, I think, for the won.
And the fundamentals are linked to energy, but also expectations that maybe some of the repatriation from SK Hynix ADRs and their listing later this week will support support the currency. Do you buy into it? Do you see that happening?
I think that is the expectation, and I think that there is some sense in which, as this, these flows pick up, that the won should strengthen from really some very weak levels. It is one of the most undervalued currencies on our metrics. I think it's quite the contrast between the strength in the equity markets and the weakness of the won. I think it's not dissimilar to some extent to what is happening with the yen. I think the won has been trading more and more like the yen over the years, and I think that feature of it is probably not going away anytime soon. But in the short term, I think some of these flows should be more supportive for the won, and it has been trading on a better footing over the last couple of weeks already.
$162 yen this morning, 165 coming. How quickly do we get from A to B?
Our forecast is that it's going to take a while to get there. We have it in about 12 months, okay. 165. So there's some time, and I think part of that is, if it was just up to the macro influences, if it was just up to, freely what is going on, the impulses in global markets, I think you'd get there quicker. We do have to take into account that periodically you're going to see pushback from the Japanese policy authorities. You're going to see interventions. What does that do? In my view, what it does is it resets the level. Every time they do the intervention, it kind of dampens volatility, but it doesn't change the broader trend. So you'll get there as if the macro conditions persist, if we have no recession risk, if the Japanese policy authorities are not super hawkish. But I think it's going to take a while.
Why stop there? Do we stop there?
Well, I think that, whether we stop there or not depends again on, what changes in the global macro conditions.
Yeah.
We have a sort of...
What's possible?
Look, again, the yen is one of the weakest currencies on our metrics. I think the undervaluation that you're seeing on the yen is really historic. And so partly those valuations forces stop there. Partly, I think, as you get towards 165, I think that's going to come alongside a pretty big increase also in Japanese yields. That's been happening more gradually. Yep. And as that happens and you compress that differential with the U.S., I think you're going to see some repatriation flows in that direction as well. All of these things, though, are not a discussion for today. They're not even a discussion for a month from now. I think it's going to take some time, which is why I think the yen is going to be weaker.
And Kamachi, on that interest rate differential, we talked about, the BOJ clearly has a role to play. That's the yen side of things. But what about the dollar side of things? I mean, we were just discussing before you came on, how much hawkishness is actually, yes, we got quite a lot from Walsh a couple of weeks ago. Less last week, more dovish, the jobs report a little weaker. Where does that leave us in terms of expectations about interest rate hikes? Because that also is key for that interest rate differential with the yen.
Absolutely. And I think, the minutes this week will be interesting to see whether there is any more color around that. Our expectation is that, most likely they're going to hold rather, for a while, at least for the remainder of the year, rather than sort of, jump into those hikes. I think there will be some premium in the curve, but I just don't think that the kind of energy price moves we are seeing, the kind of broader inflation dynamics are going to, push them into a kind of very aggressive hiking cycle. So I think that from that standpoint, I don't necessarily see a kind of very immediate pickup. But I would also set that against the macro outlook. We just took down our recession probability odds over the next 12 months back to kind of the long-term norm over the past week. So things have moved in a better way in that sense, and that I think is going to keep that rate differential somewhat wide.
Okay, and what do you expect the overall impact of these task forces to be? I mean, too early to judge, I'm sure, is the answer. But do we have any clues yet? I know you were at the Bank of England with when Mervyn King was there, and he is one name that we know is going to be attached to one of these task forces.
I mean, I would make two observations. First, I think the main impact is that it buys Chairman Walsh time, right? I think that is, the key, the aim for these. I think it gives you some time. These things will probably report by the end of the year. By then, things might become clearer on the macroeconomic outlook. So I think the first thing it does is it buys some time. I think you're right. The fact that, the fact that, Governor King is going to be leading one of the task forces also suggests that, you're going to have some relatively mainstream conclusions. I mean, he's not somebody out of the mainstream, if you like, in central banking. He's actually one of the doyens of central banking in terms of leading this. So I think that, again, we may not end up, some distance away, but not a million miles away from where we are.
Preferred carry trades at this point, and do you fund it with the yen?
I think yen is one of a mix of funders. I think you would want to have just generally low-yielding funders. That includes the yen, that includes the euro, that includes the Swedish krona, so a basket of those kind of within DM. But it also includes other low-yielding emerging market currencies, the shekel, the Chilean peso, the Thai baht. I mean, if you look at it over the last 2 weeks, these have been some of the worst-performing currencies as that hawkishness from the Fed has sort of, moved up a notch, essentially. And I think that is how you want to fund them. That buys you more carry. It also buys you more resilience when you have those kind of hawkish shocks or risk-off, moments in the market. On the other side, there's a variety of longs, I think, starting from, the Colombian peso, where after the election people have become a lot more constructive on. The Indian rupee, that doesn't look so bad after the move down in oil prices. But even, I think, moving along that dynamic, I think, in frontier markets, the Egyptian pound remains one of our favorite carry currencies as well.
Lots to choose from. Kamakshia, thank you very much. Kamakshia Trivedi, Chief FX and Emerging Market Strategist at Goldman Sachs. Really great to get your views on the programme. Donald Trump prepares to head to a NATO summit in Turkey this week, with doubts still remaining about the president's commitment to the alliance.
We are not living in happy times at the moment, and that's zooming out from Europe and looking globally. And therefore, the need for the US to rebalance its commitments is not something of the last few weeks or months. It's been a factor for years. The second point I would make is, and I am responsible for sourcing forces for SACEUR, is that European allies have definitely stepped up in terms of backfilling the adjustments.
That was Air Chief Marshal John Stringer, Deputy Supreme Allied Commander for Europe. We will go live to Ankara for a preview of the NATO summit later in the programme. This is Bloomberg.
South Korea is looking to create an investment fund using excess tax revenue from its semiconductor industry to finance long-term economic growth. South Korea, of course, being home to chip giant Samsung and SK Hynix, both of which are forecast to bring in record profits. For more, let's bring in Seoul Bureau Chief Kat Barton with the details. Kat, really intriguing, a kind of reminder that maybe chips are the new oil, as many have previously said. What do we know about this plan?
We don't know that much, but this is Lee Jae-myung, President Lee Jae-myung's policy chief, who has come out and said that they want to use these excess tax revenues, primarily obviously from Samsung and SK Hynix, to fund bold investments. So it's another sign, as you say, that Lee Jae-myung is really looking to capitalize on the huge tax windfall they're looking at ahead, to future-proof South Korea's economy, also to leave a legacy of his own time in office. So the record profits we're talking about really are very significant. Both Samsung and SK are on track to post huge record operating profits this year. So we could be looking at over 100 trillion won, which is about $65 billion US. And that's actually about what the government thought it was going to receive for its entire corporate tax revenue for 2026. And now it looks like they might get that just from Samsung and SK Hynix. So it's huge amounts of money, and they're looking to start a conversation and now potentially a fund to use that money to invest in South Korea's future. The Kospi was down at some points today, but analysts that we've spoken to are saying that this fund in itself is not a negative. But it does kind of indicate that South Korea is moving away from being a pure AI play into being a bit more of a kind of policy-driven move here.
Kat, thank you very much. Thanks for the updates. Good to get you on the programme with that. We'll continue to watch how these things develop then. Joining us there from Seoul, Kat Barton, Seoul Bureau Chief for Bloomberg, of course. Let's turn our attention to the wider market story then. In 3 minutes on the opening trade with Bloomberg Asia Markets Executive Editor Paul Dobson. And we were just hearing there from Kat about some of the dynamics around the Asia Tech story, Paul. But we're going into a really busy week for Asia Tech, aren't we? With Samsung earnings, SK Hynix, ADR at the end of the week. How does sentiment feel this Monday?
Yeah, good morning, Anna. So 3-2 is the score on everybody's lips this morning, but for South Korean equities, at least it's more 2-2 and going into extra time. A couple of positive points for the bulls out there. One, we had decent earnings and read across from Taiwan's Hon Hai, the technology company, still, kind of pushing forward those very large increases in sales. And two, we had some local reports that Samsung is going to be raising its prices for its chips again in the third quarter. So those are a couple of things that have been on the positive side. Samsung stock up a little bit today, but on the negative side, as Kat was talking about, this talk of a possible tax on excess earnings for South Korean chip makers, it doesn't have to be a bad thing, because if they're reinvesting that money in infrastructure and so on to support the businesses, it could be good. But I think investors hear tax and think, uh-oh. And also, there's been more and more consternation about these leveraged ETFs on the single stocks in South Korea, people calling the Kospi something like a casino, which, if you've been covering it day to day, it certainly does feel a little bit that way sometimes. So 2-2, what's the extra time? The tiebreaker is Samsung's earnings, which we get tomorrow. Very lofty expectations, but if it can match them or exceed them, then maybe the market takes heart from that.
OK, let's put another score up. $165 yen. We've just had Kamakshar Trivedi on the show from Goldman Sachs. That's their target. He thinks they get there relatively... that we get there relatively slowly, Paul. Is that what you're hearing elsewhere? Are we still going to see upward drift in dollar yen? And what is the pace?
Yeah, it's a good question, isn't it? I think what the MOF and the Japanese authorities have managed to do through their rhetoric and their threats of intervention is slow the pace of declines, at least for the yen, although it continues to push lower. So the Goldman Sachs call of 165 for a year from now is not very far from where we are now, but it is still pointing to that sort of bearish direction. And we have hedge fund positioning, net short positions, the biggest and the most extended since 2017. So that tells you that the market is also looking for more weakness in the yen. Goldman Sachs is recommending it as a funding currency for carry trade. So that's not so much leaning on the idea the yen will depreciate, but that because its interest rates are extremely low, you can make money by borrowing the yen and investing it in higher yielding currencies elsewhere.
Paul, on energy, we're looking at Brent at $72 a barrel. What is the level of conviction in the markets that oil remains at or below these levels?
Yes, so I think if you're bearish on the yen, if you're looking for market sentiment, much more bearish on crude oil. We had the symbolic OPEC meeting again talking about increasing production over the weekend. We've got pressure from short-term levels because of the amount of crude that's flowing out from the Strait of Hormuz and production elsewhere as well. We've got the front end of the curve, I think, back into contango, which tells you that there's plenty around at the moment for people. And then Citigroup coming in with quite a radical call, looking for $60 by year end. So plenty of fodder for the bears there too.
Paul Dobson, Bloomberg's Asia Markets Executive Editor. Thank you, Paul. Let's get your stocks to watch this Monday and bring in Chloe Melly. Standing by. Chloe, starting on Easyjet.
Yes, good morning, Tom. After weeks and weeks of playing hard to get, Easyjet has finally accepted a fifth proposal from Castlelake. So it's agreed in principle to a takeover offer of more than £5 billion. And so initially Easyjet had called the offer and the approach highly opportunistic, but it had started to change its tone as the offer got sweeter and sweeter. And it seems that now it is just sweet enough. And so we had seen, as we can see here up here on the board, a huge rally as their takeover rumours were circulating. And we could see this acceptance this morning really boost the shares even further this morning. So definitely there will be some movement there that we'll be watching out for. Moving on to some more M&A, and we've got in the defence sector, Thales buying Excel Technologies in a deal worth €3.9 billion. Excel is a company that makes submarine drones. It competes with the likes of Kongsberg and Saab in that space. And so for Thales, that means really getting those capabilities, accelerating those capabilities in that space. Some analysts have said this is a deal that is looking quite expensive, but that it makes a strategic sense. So we'll see how the market reacts to that this morning. And finally, Continental has also agreed to sell its industrial tech business, ContiTech, to Lone Star Funds at a €4 billion valuation. This now completes Continental's strategy of becoming a tire-only business after listing its auto parts business, Omovio, also recently. And so we'll see how the market reacts to this new streamlined version of Continental this morning.
Chloe, thanks. Chloe Melly with the stocks to watch. We'll add to that list then with ITV as well, because this is a really fascinating transaction. It's been a perennial takeover target on the London market, hasn't it? Talked about for so many years as potentially an acquisition. Well, now we've seen them spinning off a large part of the business, in fact. This is the free-to-air and the streaming side, which will now go to Sky, which, as you pointed out earlier, is owned by Comcast. So this puts a lot more of the UK broadcasting landscape into US hands, it would seem. At least that's one of the dimensions as a result of this. And ITV becomes then a studio, a maker of programming. Just that part of the business remains listed, and shareholders are going to get a big return of cash. So certainly one that we will watch this morning.
What is interesting about this is Comcast is also breaking itself up. It's just announced that it's going to be doing that. So you're going to
parent company of Sky.
Yeah, parent company of Sky.
Big US broadcast.
It effectively brought cable and studios and NBC and all together under one roof, and it's now basically going in the other direction. You've got the kind of connectivity side of the Comcast side, then they're going to put the rest of the business into another group, which is going to effectively be spun out into NBC Universal. So ITV is going to become part of that. So this is a huge group that it's becoming part of, and you do wonder where the synergies are going to lie and what NBC has been really positive about its Sky acquisition. What is it going to get from the ITV acquisition that is going to bolster that? So it's going to be interesting to see kind of what the logic around this looks like.
It's the further fallout as well as the shift to streaming and cable cutting as well in the US. And another reminder that there are assets that US investors still value here in the UK as we think about Easyjet as well. A very different sector. But there's value here in the UK, and even if the public markets aren't showing that.
Yeah, who was it last week who kept telling us about, all these international investors think that the UK is cheap, but the public markets don't necessarily seem to put the same value on these assets as foreign investors do. European futures then looking pretty, flat to negative
after
this morning.
record highs on Friday.
Yeah, record highs on Friday.
Yes, which was a response to Thursday. But we now don't have the guidance coming out of the United States, so I think we sit and wait and look for a catalyst. Doesn't look like it's come out of Asia. It'd be interesting to see how the tech trade works. But we basically need to look forward to the United States session a little bit later on to give us some guidance, maybe. Yeah,
a lot of news then set to come out of Asia this week, from Samsung earnings to the SK Hynix ADR at the end of the week. We'll keep across those, as well as the European market open. That's coming next. This is Bloomberg.
Elated but tired is probably the overriding sentiment in Europe this morning. Something to do with the football, maybe not to do with the markets. Thursday feels like a long time ago. That was when the US last closed, so I'm not going to show you that chart. I'm going to show you this chart. This is S&P futures on the day. We're up by around 0.3 to 1%, and the Nasdaq's up even more. How does that influence the European picture this morning? I'm not sure that much. The US feels like it's still in the rearview mirror. We need that next catalyst. Are the futures telling us much? I'm not sure they are. They're telling us that we're going to get a positive session over in the United States, but some of that's simply catch-up, Tom.
Yeah, that catalyst, is it going to be the FOMC minutes? Is it going to be Samsung's earnings on Tuesday? Is it going to be SK Hynix, the ADRs, and what that does to the chip trade towards the end of the week? European futures right now are flat, but again, in the context of record highs by the close on Friday. FTSE 100 futures currently pointing down by 4 points. DAX futures also a little lower, just by 13 points right now. It seems, a futures setup looking for that next driver for these equity markets, Anna.
Could some of that come in the shape of transactions, M&A? We've got quite a bit of that this Monday morning then, Tom. Let's go to some of that and how that's looking to influence the market. So on the subject of Easyjet, we have the airline, of course, agreeing to Castlelake's latest bid, the fifth one, topping £5 billion. So we'll keep an eye on that one. ITV, similarly, a transaction taking place there. They've agreed to sell their media and entertainment arm to Comcast. That's all the free-to-air broadcasting. That's all the streaming at ITV. Leaves ITV as its listed entity being all about the studios and production. And then we'll keep an eye on what happens with Thales in the defence space. Thales is said to agree to buy a 35% stake in XL Technologies, a maritime robotics company, and it plans to acquire the rest of that business as NATO meets this week, Guy.
Yep, plenty going on, plenty to factor in. Index level very quiet. Below the surface, some quite significant M&A taking place this morning. We'll track all of that. We'll work out what it's all going to mean. But I think from the get-go this morning, not a lot of action in the European equity space. 0-0 is kind of where we are right now. The FTSE 100 is barely budging. Some of the action actually in terms of the M&A stories that Anna was talking about in the 250. So maybe watch that market this morning for a bit more action. The Stock 600 going nowhere. I'm not expecting anything from any of these major markets this morning. I'm interested to see what we see in the tech story this morning after the narrative coming out of Asia. But actually, I think the M&A story is going to provide us maybe with the highlights of the Monday morning session. Tom, sectors?
Right now, you talked about technology. That is leading the losses as a sector, down 0.6%, but having been amongst the strongest by the close on Friday in Europe. Basic resources also weaker by 0.5%. Utilities, which have been near the top of the list on Friday, also a little weaker by 0.5%. Autos, so far, top of your list in terms of European sectors and performance, with gains of almost 1%. Travel and leisure also up by 0.8%, Anna.
Yeah, looking for movement then in some of the individual stock names that we were talking about. We have some of them opening up already, actually. And so in the defence space, Thales is down by 1.4%. Exail, which is the business that Thales is buying 35% of, and then maybe the rest of at some point, a maritime robotics company, that stock is up by 2.9% this morning. Both of those are French listed, so that's a defence deal. We talked about defence M&A just last week, didn't we? And with NATO on the horizon, that is certainly an interesting place to think about where more M&A opportunities might come to fruition. ITV, interestingly, not really moving all that far on the back of the deal news, it would seem, up around 0.2%, so not much movement there. And Easyjet yet to open. It closed at 558.20, and the fifth offer from Castlelake coming in at lots higher than that. So we would expect it to go higher. But will the market still continue to be a little bit sceptical about sort of, whether this can actually come to pass?
August the 3rd is now the next date in terms of the kind of the put up or shut up deadline, so that's obviously still looming. But yeah, 690. So in theory, we could be up by 24 or 25% this morning.
Yeah.
So we're not going to
subject to some execution risk.
Subject to some exure risk.
Other airlines, others in the travel space are doing quite relatively well. So we'll see. We don't have that print yet on EasyJet. So Ryanair is up 1.7%. You've got AAG gaining 1.5% and TUI Travel up 3% as well.
Okay.
Oil prices are coming down. So that's another kind of thing to bear in mind.
Yeah, something else for the mix. Let's bring in this Monday morning Obi Ejikeme, who is a global equities fund manager over at Carmignac, and the perfect person to take stock of the global equities trends that we're seeing right now. Obi, nice to see you. Thank you for coming in. It's a kind of complicated picture right now because we've got the overall narratives, we've got plenty of rotations to talk about, whether that's within tech or between tech and other things or between different geographies. Set us up with your overall kind of the overall landscape for global stocks at this point, this Monday morning.
Good morning. I think the big picture story here is how is this year going to finish? We've had a first half of very focused trades around.
You're going to say it's a game of two halves?
It could be, a game of two halves. Yesterday felt like it was a game of four halves.
Yep.
I think we've had a first half which has been very focused on one specific narrative. The stocks have done pretty well as a result of that. But I think what's key is who takes the baton into the second half. Is what we saw last week, this sort of like momentum reversal, which felt like a bit of repositioning by the fund management community, is that the start of a bigger trend or is it just a one-off? And I think what we should all be really thinking about is if this trend of AI and the growth story of AI has been the main story of the first half of the year, can it really persist into the second? And if it doesn't, actually, it's quite optimistic because there's a lot of stocks that have been left behind.
So last week, you flagged this that last week, if you were looking at factors that the market is trading on, that momentum was pretty weak, last week. If we're looking at Stock 600, momentum was pretty weak. And we saw instead the market preferring things that were heavily shorted and some growth, more cyclical names. What do we take away from that experience last week and bring that into the second half of the year?
Look, I think it's a bit more simplistic than that. Actually, it was a sort of anti-AI, anti-tech trade, and everything else that's sort of not really taken part in the rally this year, sort of a bit of a comeback. And I think that's the risk for the second half of the year, and primarily because expectations in this AI boom story are extremely high, to the point where we're seeing levels of optimism that we haven't seen for many, many years. And as a result, I think the risk to those stocks remains quite significant. There is no room for disappointment. So what the market did last week is essentially say we're going to take a bit of chips off the table from the optimistic side and put a bit of money into some of the laggard parts of the market where there hasn't been such a great story.
That sounds really straightforward. You just got to sell a bit of that, take some profits, buy a bit of this. It's really. Doesn't the whole index just come down if tech gets battered?
No. I think that's where I'm somewhat more optimistic than the average person. I think the tech sector and the AI part of the market is a dominant part of the market, but actually I think it's sucked in so much capital that there is actually a risk that as money starts to move out, it goes into so many other areas of the market. And don't forget, there are some parts of the market that really haven't participated. The consumer hasn't participated. We've seen oil prices come down recently.
Yep.
All these things are a net catalyst to stocks which really haven't seen much of a run this year.
So indexes can maintain their current multiples even if we sell tech.
I think we're coming back to a stock pickers market and less of a narrow theme market.
Yeah.
I think actually because so many stocks have been left behind here, it's actually going to be quite a good news story. So you've seen all the charts of the equal weighted S&P, so strip out the big names, and how it started to turn a bit versus the market cap weighted index. I think that's going to be the story, potentially the story of the second half, is we go to more stocks, less narrowness, and that could be...
Where does Europe sit in that story?
Well, ironically, because Europe doesn't have as many of the AI-themed stocks within its index, it's been one of the laggards. So the money's been sucked into the emerging markets, which I still think is a good long-term trend. But actually, the relative story here could be some of that money comes back into Europe, into areas where there hasn't been such a buoyant tech theme.
Is that also making an assumption that the growth story in Europe starts to improve, that the consumer starts to look a little bit more resilient? You mentioned lower oil prices and how maybe investors haven't really seen that read across to consumer space. Is that part of the thesis for Europe as well?
Look, I think on the margin, these are all helpful things. And they've all been headwinds. I mean, we saw when we had the problem around geopolitics and the oil price going up, it was a sell Europe, sell the exporters story. So as a result, actually, if we start to see a bit of a reversal of that trend, I think on the margin, Europe could become more interesting. It's just because these stocks have been sort of left behind. So there's a chance for a bit of a re-rating.
So if we see pullbacks in memory names, which in the second quarter was the area of the sort of most excitement, not the hyperscalers, but if we see a pullback there, should we not think about that as a broad de-risking then? We should see that as more of a broadening of markets. Will we be able to keep our heads and think that, do you think?
I think it will be challenging. And of course, every single time we have one of these little pullbacks, it will feel a bit more violent than it has in the past, partly because these stocks have gone up a lot. And so, I think you have to be selective, and that's what we're doing. We're selectively looking for the names that I think will be the long-term trend, but at the peak of a growth cycle, and that's what we're talking about here. Cyclically, these stocks have grown phenomenally this year. We think they're going to slow as we go into next year. So on the margin, you can't own the same proportion of those stocks as you did when they were growing at the fastest rate. So I think that's all that's going to happen. And a bit of money has been taken out of those stocks, and you want to be a bit more selective.
Are stocks going to be the best hedge against tech, or are there other areas of the market that you want to look at? Bonds traditionally have done this, but it looks like the bond-stock correlation story is maybe reversing. What else do I do in a portfolio to hedge maybe a rollover in tech?
Look, I think because the tech narrowness, and I'm being a bit careful about the tech narrowness, the AI tech narrowness. Even within tech, obviously, there's the software part, which has completely done the opposite of the AI part. I think that the problem has been there's so much money has gone into that part, the rest of the market actually is now becoming the natural hedge. The beta of the volatility of all other stocks in the market versus the NASDAQ and the AI sort of theme is actually quite low. So your natural hedge is actually becoming just focused on areas outside of the AI theme.
Obi, give us your thoughts on M&A right now. I'm not sure what conclusions to draw from the wave of M&A that we've got. I mean, a couple of spring to mind, and I don't know which you favour, but UK assets are maybe still too cheap. Is that one of the conclusions? We've got Easyjet, we've got ITV asset sales taking place there. Or you weave in the defence sector, where we're seeing some deals taking place as well, and this is a broader theme. What do we take away from the M&A sort of flurry that we have this morning?
Yeah, look, I'm going to put M&A and the IPOs all into the same bucket. I mean, this just shows you that there's a level of confidence around the investor market at the moment. And that typically happens when the stock markets are at the high. We're getting closer to later cycle than we were earlier in the cycle. So I think it's all tells us about investor confidence. But, I guess it's back to the theme that we've been discussing this morning. That confidence has been primarily driven by a very narrow theme or thematic within the market, this AI theme. And I think, the fact that the other parts of the market haven't really participated means that I think this is kind of relatively healthy. If it was a full bull market and every part of the stock market was participating in this, I'd be a bit more concerned. But the fact that there's still room to run in other stocks is quite positive.
Specifically on UK equities, is M&A a catalyst that we should be thinking about? If you want to get exposure to UK stocks, how much of that is part of the story?
Yeah, look, the UK stock market suffers from what we don't have, or what we have in other parts of the market. So it doesn't have the growth story. So if it's acquisitions for growth, I think that's a great thematic to latch onto. And that's one of the areas that the UK stock market typically, because it's an income-focused, return-focused market, I think it's where it kind of lacks. So if it's acquisitions for growth, investment in the future, I think that's a good story.
If we're late cycle, why would we rotate into the rest of the economy? If we're heading towards a late cycle, why is the rest of the market going to benefit?
The bull markets always end with the laggards of the trade or the laggards of the cycle being the best stocks. And so, if we are getting closer to the end of the cycle, you've got to look for the stocks that haven't really participated.
Where do you think the end of the cycle is? How far away do you think we are?
Well, if you were just talking about the AI and the tech growth, you would argue that we're certainly closer to the highs. But I used some examples earlier on. Consumer confidence around the world is near record low levels. You've got oil prices are just coming up high. So actually there are parts of the market, you could argue, that are actually very early cycle. So, it depends how this plays out. If we see the consumer start to recover, oil prices come down, inflation starts to be a bit less of a problem, then actually we could be at the beginning of a bull market in the consumer. So not as late as even I'm suggesting.
OK, we'll leave it there. Abir Ejikeme, Global Equities Fund Manager, joining us from Carmignac. Quick scan of the situation at the moment. You've got Easyjet up. We'll talk about that in just a moment. The Core 6 looks like this. You are seeing a more mixed picture. Tech is down. You've got ASML under a little bit of pressure. Defence is up. Rheinmetall is up by 0.8%. Let's find out where we are watching this M&A story play out most aggressively this morning. Chloe's got all the details of that.
Good morning, Guy. Indeed, we are seeing Easyjet jumping this morning. We're up more than 10% after accepting this latest fifth bid from Castlelake. And so this is a takeover offer of more than £5 billion after weeks and weeks of Easyjet calling the approach highly opportunistic. It seems that now the deal was just sweet enough for Easyjet to accept it. And so we are seeing investors react very positively to that this morning, and we're up very strongly. We're also seeing that read across into European airlines more generally. We've got the British Airways owner, IAG, Ryanair and TUI all up in the green this morning. This is obviously a sector that's been struggling quite a bit with higher fuel prices and consumer confidence being knocked down a little bit. But now those oil prices are coming down, and there might be also a bit of enthusiasm around a potential deal wave that might be coming for that sector. And so we're all up in the green there. We're also going to be watching out for another M&A story, which is the Thales and XL deal. So Thales has agreed to buy XL Technologies in a deal worth 3.9 billion euros. This is boosting the shares for XL a little bit. This is a submarine, a drone making company, marine robotics, etc. But for Thales, we're a little bit weak because potentially the price tag is looking a little bit steep, even though it does make strategic sense. So we've got this happening now. We've also got Continental down a little bit after agreeing to sell its industrial technology unit, ContiTech, to Lone Star Funds at a valuation of 4 billion euros. This is now a streamlined company that is focused only on tyres, but it seems that is something that investors are not reacting to super strongly this morning. We're down about 2.6% there. And finally, let's just have a quick look at tech companies here, because all those AI-related companies, tech companies in Europe, are seeing quite a lot of weakness. Actually, we saw a lot of that caution around the sustainability, the durability of this AI-driven rally, and that led to a bit of weakness in Asia that is now spilling over into Europe. And we can see BE Semi in particular down actually more than 7% this morning.
Chloe Melly with the stocks on the move this Monday. Coming up, shipping in the Strait of Hormuz shows some signs of recovery days after unexpected U-turns and unexplained U-turns and detours. We bring you the details and the latest next. This is Bloomberg.
Welcome back to the opening trade. Monday morning, Monday the 6th of July, and this is the picture on European stocks. Flat, really. It's not flat to negative, though. That's what the futures picture had suggested. There's a little more positivity, but it really is pretty flat, isn't it? US futures are pointing a little bit higher. That's catch-up. Nasdaq futures up by 1%. We have around two-thirds of sectors, Guy, in positive territory this morning, led by media.
We'll take the positive story, the ITV narrative. Let's fold in another M&A story as well, and that is surrounding Easyjet. So here's what Easyjet shares are doing right now. We're trading at 6.17. We're up by 10.5%. The offer price from Castlelake, though, is 6.90. So we're way away from that. So why is the question? What is the market seeing here that it's concerned about? We've got a takeover offer in principle. Kenton Jarvis looks like he's kind of on board and pushing this. So why aren't we trading at 6.90? Why are we trading at 6.15? Let's try and answer that question. Let's bring in Bloomberg transport reporter Danny Lee. Danny, what do you make of this?
It's a real head-scratcher. I think there are one of two reasons at the very least, whether the offer is not high enough for some key investors, particularly when you look at founder Stelios, who has still a huge affection for Easyjet and what he built up over many, many decades. And then you've also got the Competition Commission, both in the UK and in Europe. Where will they land effectively on this takeover approach from Castlelake, a US investment firm? They're not European citizens or European entity, and they will need a partner in all of this. So at the end of the day, whether the market is reading this share price jump of 10% as this could still have more hurdles with this takeover in principle offer is a real question mark. So I think there is still a lot that the market and investors and shareholders are looking to wait and see, have more clarity on over the next coming month as we do get to that next put up and shut up offer on August 3rd.
Yes, interesting then. Does that take us some way to answering the question around what happens, what needs to happen to actually get this deal done then? Danny, you've referenced a few things there, getting key shareholders on board, satisfying regulators, bringing in or perhaps solidifying the position of these European-based individuals who've been brought into the mix, former Easyjet employees, I think, in one case, to try and get this over the line. That's still quite a long list, isn't it?
Yeah, well, I think when you look at the now and until then, we will see Castlelake do its due diligence. I think they will have taken already a close look, and they've already got experts like the former Easyjet executive Peter Bellew on board to help steer and guide them. But as you said, there is still a lot that raises questions about who exactly Castlelake may partner with. But at the end of the day, the momentum in the European airline M&A space is quite significant. We've already seen the likes of Lufthansa and Air France, KLM, be very active with the likes of ITA, SAS Scandinavian. We've still got TAP Air Portugal still yet to be resolved. And so with the likes of EasyJet coming into the fray and the prospect and the overhanging question of the future of EasyJet as an entity, there's a lot that remains to be seen.
OK, so Danny, what do they do with it? I spoke to Carsten Spohr a few days ago. I spoke to Luis Gallego a few days ago. They both run Lufthansa and IAG. I spoke to Ben Smith, who runs Air France. They're interested in bits of this business. Is that the future of EasyJet? Is this a breakup now?
I think when you look at the bigger rivals who are circling at the end of the day, I think that the kind of conclusion is EasyJet is more valuable as a sum rather than as a whole. When you look at how you can carve out particularly the UK and the potentially the Swiss parts of the business, and maybe IAG could be interested in just the continental Europe parts aside from Switzerland, then you could see someone like Lufthansa or Air France KLM looking at other parts to shore up its parts of the business where it's weak in Europe and in the UK. You do see a lot of the European airlines, the larger European airlines, looking at the attractive slots, the runway slots in Europe that EasyJet has access to, and potentially that order book. There's a big question around this huge order book that EasyJet has, over almost 400 aircraft, and then obviously its fleet size of around 350 aircraft. It's a big size, and with the supply chain pain you've seen in the airline industry, and also just how hard it is to get new aircraft, I think for these larger carriers, they'll be looking quite excitedly at the prospect of maybe breaking apart a really successful European budget carrier.
Danny, thank you very much indeed with that update, and we'll see, of course, how that potential deal progresses. Danny Lee with that offer being accepted, at least in principle, from EasyJet Castlelake, around $5.2 billion US. Meanwhile, oil prices, and this was part of the story, of course, in terms of the challenge for EasyJet, oil prices are fluctuating this morning in a narrow range as flows through the Strait of Hormuz continued, and OPEC Plus signalled higher supplies. Let's bring in Stephen Stupczynski, Bloomberg's Asia energy reporter and team leader, I should say. Stephen, where are we in terms of recovery of tankers through the waterway? What have we seen over the weekend? What does it tell us about the appetite, in terms of the risk appetite of those shipping companies? Where do things stand currently?
Yeah, I mean, at the beginning of the weekend, there were some fears that maybe you would see a tightening of Hormuz transit because we had some unexplained U-turns on the Omani route out of the Persian Gulf through Hormuz. There were also reports about how Iran was sending radio transmissions that the strait is closed only to their route. It's open, and you need to have permission to go through, which maybe would have scared or spooked some captains or suppliers or owners to kind of get their ships away. But then we saw some more ships go through the Omani route yesterday, and things are kind of status quo. We are not, you see this chart on the screen, we're not nearly anywhere towards a pre-war level, but we are higher. We're elevated since the U.S. and Iran signed their interim peace deal. And I think there is an expectation that we will continue this gradual increase upwards. I think the fact that we're sort of in this level, we're higher, not super high, but trending higher. This does indicate potentially some ease in the market. I think there is some expectation that this will continue and ramp up as more ships come to the region. But of course, we're going to have to really wait and see carefully. I would characterize the ship owners and those around are cautiously optimistic. You're not seeing a rush, but you are seeing more ships go through than they normally would.
I know we've got some interesting reporting as well, Stephen, around the UAE and its ability to shuttle some of its product out of the Strait or out of the Gulf via the Strait of Hormuz to other vessels that are waiting. Interesting, using some of the tactics that we've seen by some of the more, the dark ships around the world, using some of their tactics to get through the Strait during times of war, during times of tension. I guess this speaks to the resilience of the flow, even though it was much reduced during the time of war.
Yeah, I mean, I think that's a very interesting thing to point out because, they adopted these new tactics. They figured out ways around it. And while, we had the chart on the screen a moment ago, those are ships that we can see. There might be a lot more dark transit happening that we just aren't aware of right now. And that was the case for many weeks in the war. ADNOC was shuttling in and out its vessels, all dark, same, not just oil, liquefied natural gas as well. They were getting it in and out, but not just are we talking about ships? These companies have found other ways as well. I mean, you have Saudi Arabia also using its east-west pipeline, kind of shipping more of its oil into the Red Sea and through the Bab el-Mandeb Strait as an alternative to get its oil flows to its Asian customers. So when you take those alternatives, you take the dark shipments, and then you take the flows that we can see, we are painting a much brighter picture. There are some suppliers that their output, Saudi Arabia, for example, is much nearer to the pre-war levels than we were weeks ago because of these alternatives, because they're allowing their super tankers to go through Hormuz again. I think the market is pricing that in, and that's why oil prices are back down to those pre-war levels for both Brent and WTI.
Yeah, 71.85 on Brent right now. Stephen, thank you very much. Stephen Stupczynski, Bloomberg's Asia energy team leader. And interesting then that OPEC Plus over the weekend stuck to its plan to raise output, although, some of that's coming from the Gulf and we do and don't have a handle on how much is coming out with their transponders. But some of that's supposed to come from Russia as well. I mean, Ukraine has been taking aim at some of that infrastructure. So that's certainly something to watch. But apparently we're heading for a glut. A lot of oil potentially on the market. So we've seen that kink in the curve. We'll watch that very carefully. What have we got coming up? We're going to focus on AI in the UK specifically. New report out of HSBC. This is Bloomberg.
Happy Monday. This is the opening trade. We are 30 minutes into today's session. You're up 0.1% across the European benchmark. So building on the record highs that we got by the close for European stocks on Friday. Very strong session, or at least a strong session, I should say, over in France, with the CAC current adding 36 points, up 0.4%. Also some strength here in the UK. The FTSE 100 up 37 points, up 0.3%. Travel and leisure is certainly playing its part. The DAX gaining just 39 points so far in the session. Guy.
Okay, so a little bit of momentum when it comes to the index levels, beginning to pick up a little bit of pace. 378 up, 207 down. So a reasonable ratio, certainly on the upside, but volume remains light. We are missing the United States. The US will be back a little bit later, maybe to provide some guidance. The overnight story out of Asia, weakness in the tech space. And you can certainly see that on the Stock 600. But at the upper end of the Stock 600 and the broader markets, you've got some really interesting M&A stories as well that are worth focusing on. Easyjet is one of them. It is up this morning, but it's not at the Castlelake offer price, so that is signalling maybe the merger arbitrage kind of story still suggests some risk is out there that this transaction won't happen. We're trading at 611, but we are incrementally continuing to push higher and higher. XL is being taken out by Thales. That stock within the French market up by nearly 4%. And Leonardo, the defence space is up this morning, but Leonardo is outperforming. And the reason appears to be that we have reports in the Italian media this morning that Italy is maybe looking to up its defence spend, and that is being factored back into obviously one of its big primes, which is Leonardo. It is up by 4.4%, Tala.
Yeah, important week for defence with the NATO meeting taking place. Let's get an update, though, on some of the other stories we're following this morning. Chip stocks in South Korea whipsawed in today's trade ahead of a crucial week for tech investors. Samsung is set to report preliminary earnings tomorrow, while SK Hynix is seeking to raise $29 billion in an ADR listing. That's due on Friday. Easyjet, as we've just been hearing, has agreed in principle to a takeover offer of more than £5 billion from Castlelake, which swooped in as the UK budget carrier was reeling from soaring jet fuel prices and suppressed demand after the Iran war. So this fifth offer seems to have been accepted, but the stock not trading at the offer price just yet. And over in football, the US star striker Folarin Balogun will be allowed to play against Belgium after FIFA reversed his one-match ban. Bloomberg understands it follows a phone call between President Trump and the FIFA boss, Gianni Infantino. Belgium's team says it's, quote, astonished by FIFA's decision and is reviewing possible options to appeal. Tom.
OK, let's turn to tech right now. Ireland's economy is uniquely dependent on jobs from US tech companies. More than 6% of the workforce is employed in the tech sector, higher than the EU average. But now many, like Meta, are culling jobs as they invest in AI, creating widespread employment anxiety. Joining us now is Olivia Fletcher, our Dublin bureau chief reporter, who's been looking at this for us. Olivia, so concerns about what AI is doing, the investments in AI by some of the big hyperscalers, and Meta's example, of course, and what that does to the jobs market in Ireland. How exposed is Ireland, is that nation and its economy to AI disruption?
I mean, yeah, ultimately it is more exposed than a lot of other countries. And the reason that is because, like you say, there's this kind of informal arrangement that Ireland has with a lot of these multinationals. You know, over the past few decades, companies like Meta, Apple, Amazon, Google have all set up in Ireland. And, you know, they pay a lot of tax here, but also in return, you know, they really boost Ireland's economy. You know, without them, Ireland would be in a fiscal deficit. And, you know, they also have brought thousands of jobs. What's changed in the last few years is that, you know, a lot of these companies have kind of been restructuring. You know, after the pandemic, a lot of jobs were cut at these companies. And, you know, the companies kind of attributed that to overhiring during the pandemic. But you know, in the last year or so, a lot of jobs that are being cut is because, you know, these companies are saying that they're investing billions of dollars worth into AI efficiencies. So they're no longer going to need certain roles that Ireland happens to have a lot of. Content moderation, legal, trust and safety. You know, those are the kind of roles that are being impacted that Ireland has a lot of. Obviously, it has some core engineering jobs, although perhaps not as many as, you know, LA or Tel Aviv. And so, you know, it's hugely worrying for the Irish economy.
OK, so we're then wondering how Ireland's labour market will be impacted by all of this. Will there be more unemployment? Will there just be churn? And I guess the government is going to be focused on this as well. What can the Irish government do in this context?
Yeah, I mean, the Irish government produced a strategy in the last few months. to try and figure out how it's going to, kind of combat this issue. It's probably going to be one of the first governments that's having to deal with this at quite, the significant scale that it is. In the report, the kind of key takeaway was that it wanted to reskill and upskill, and to try and create that next kind of stack of higher quality research and development jobs that Ireland would like more of. But also on the flip side, Ireland wants to kind of see this as a benefit as well. Obviously, it recognises there's going to be disruption, but also it really wants to try and harness this opportunity. And, it's hosting this summit in autumn. It's inviting CFOs like Sarah Fryer, we've reported this morning, from OpenAI. And, these companies, we've reported last year, for example, that OpenAI and Anthropic actually are expanding in Ireland. And, that is with some kind of core engineering roles. So, there are kind of two sides of the coin. Ireland probably will be impacted by a lot of these jobs, but it really has to try and climb up the stack and create these next kind of high value jobs. And, whether it can or not is another question, but it's really important because it just cannot be understated how much Ireland relies on these companies that have totally transformed the economy. So it really needs to kind of up the game and kind of create this kind of next level of jobs.
OK, Olivia Fletcher, our Dublin Bureau reporter, thank you for that. Meanwhile, here in the UK, startups raised $17 billion in venture capital funding during the first half of 2026, marking the strongest opening to a year since 2022. That is according to new analysis from HSBC, Innovation Banking, UK and Dealroom. AI startups raised $12.6 billion, setting a new annual record in just 6 months. Joining us now is Emily Turner, CEO of HSBC Innovation Banking UK. Emily, thank you for joining us. So we have an update. We have significant inflows and investments, particularly in AI. Does the momentum continue? What are you seeing?
Yeah, this is a great time to be in the innovation economy in the UK. When I think about the $17 billion that you just referenced, there's really two parts of it. One is scale, and that's AI, as you mentioned. Two is maturity. Not only is it that we're seeing scale in the number of deals, but we're importantly seeing scale in the size of deal. For many years, there was a question around, could the UK support larger and larger deals? And we've seen that. In the first half alone, we saw 28 companies raise over $100 million and 4 companies raise $1 billion. And it wasn't just $1 billion for late-stage companies. We actually saw the first seed-stage $1 billion raise in this market, which puts us on the stage with every other market in the world.
Yeah, I think you're referencing ineffable intelligence with that seed round of over $1 billion US. How reliant, though, are we on dollar funding still for these deals?
So at the end of the day, entrepreneurs need funding, and funding is globally mobile, and I think that's a good thing. And so, yes, at seed stage, we've seen 77% of rounds led by UK-based investors, but it goes to only 16% if you look at 250 plus. So there is indeed a real tailing off of the UK ability to participate and to lead rounds as you go later and later, and importantly, larger and larger. That said, the fact that money is coming in speaks to the quality of talent, the quality of businesses being built here, and their ability to scale.
Is the second derivative changing? Is this accelerating?
I definitely think this is accelerating, the trend that we're seeing. I think we're seeing that in two ways. So one is, if we look at the UK market, 68% of funding came from large deals. If we look at the US, that's 91%. And we're moving in that direction. So I think in the UK, we have to assume that we're moving in that direction where a larger number of large deals happen and they are at larger and larger amounts. And so that will create more and more concentration in the market, but the market will grow across it. Two is the trends that we're seeing globally, meaning deep tech, AI, really research and discovery driven companies, that plays to the strengths of the UK, be it in deep tech, areas like quantum, as well as in things like biotech and importantly AI.
How much of this is university related?
So the UK is, universities in the UK are a huge strength. We've seen over the past few years 20% of companies raising venture capital coming out of UK universities, which is a real standout on the global stage. Importantly as well, we have some of the best universities in the world. That said, universities are not the only place that we see startups coming from. And one of the key things, back to your earlier question around, is this continuing. We're seeing what I think of as founder factories. So if you take a company like Deliveroo, 57 new companies have come out of people who came from Deliveroo. We're seeing the same thing with DeepMind. Tom mentioned Ineffable. The founder there comes out of DeepMind. So more and more we're seeing companies not just have great outcomes themselves, but the founders and the employees, not just the founders, have learned the skills, have proven themselves, and they can attract the capital to then go after the next company.
Emily, is AI sovereignty, is it a thing that is discussed at this level, at this size of business that you're talking about here? I mean, Tom was recently in Paris, and a lot of executives quite alarmed by the way the US administration had been managing certain rollouts, certainly around Anthropic. Is AI sovereignty something that is energizing the sector here or alarming it? What's the read?
I think, like any market that's very active, you're going to see people at all ends of the spectrum. Overall, though, I think that the tone is very bullish. AI sovereignty here, you can see steps like the launch of the Sovereign AI Fund, which is becoming quite active, as well as a number of other steps. That's super important. And what we see in the UK, but also in Europe, is that public sector money plays a real role in these markets. And so that's a driver that we don't see in other markets.
Okay, so thinking about the public sector takes me to the next thought, which is that we've got, I mean, not a new government, I suppose, but a new leader coming in at some point, and we have a pretty good idea who that's going to be. There's all kinds of reporting about things they might be tempted to do. Big changes to the tax system, not to do with tech, but it might impact tech and entrepreneurialism, I suppose. Many governments have wrestled with ways to get the pension industry in the UK to better fund startups and innovation. I mean, where should the government be focused in your mind?
Yes, I mean, I think to your point, there's still a lot that we don't know. But two things that we do know are, one, that over the last few years, there's been investments in things like the British Business Bank, giving them more balance sheet, more ability to invest to the public sector investing.
And has that been material? Is that something to continue?
So that is definitely something to continue. I mean, the British Business Bank invests both directly and through funds in this market, and so that is something that we see to continue and very much support the market. But so that's one part where you say Office of Foreign Investment, British Business Bank, the industrial strategy, all of those things have laid out a real path for growth and are creating real tailwinds for this market. Two, as you say, and to your point, sort of we don't know what is coming, but if we look at what's happened in Manchester in the recent past, there's been a real commitment to things like skills, education, and infrastructure. And if I think about what's needed to succeed in venture capital, and importantly in venture capital startups in this country, those are three important drivers. So if we keep skills, infrastructure, and that sort of broader push for growth in mind, that supports here.
So some Manchesterism that maybe the tech sector won't mind seeing.
It's interesting that you reference Manchester, because you do hear in the ecosystem right now real anxiety that Burnham is going to come in and kill the goose that lays the golden egg. I mean, do you think that's overwrought in terms of some of the concerns that have been flagged by pretty prominent names in our eco startup system here in the UK?
You know, I think it's too early to tell what's going on, but I do think we've got tailwinds, we've got the macro trends, and ultimately, as I said before, capital is global in nature, as is talent. And between the fact that we've got great science, to the question before on universities, we've got great discovery here, and then we've got huge demand, I think all of those things will be driving the market.
So ultimately, when we next see you, okay, so what are the trends that you're watching out for? Kind of what comes next? As this thing starts to gather pace and evolve, what are the things that you're looking for? What's the next key milestone that you're going to be watching for?
Well, thank you for saying that you're going to invite me back.
You seemed surprised when you came a moment ago. You're like, I'm back.
So I'll take that first. But you know, I think it's a few things. So one is we need to see a pace of new company formation. So in the first half of the year, we saw just over 800 companies formed or getting their first venture capital. Generally speaking, we're on a track for 1.6 thousand a year, so we're hitting that target. Two is this late stage that I talked about. Right now, we have 217 unicorn companies in this market, where 18 of them are new year to date. We need to see that continue, and importantly, not just at unicorn valuations, but we need to see those companies attracting real revenues and showing real traction on a global scale. So those are the things that people should be looking out for. How many companies are not just valued highly, but also have enduring customer relationships that they're able to really capture value, not just from customers here, but around the globe.
Emily, you're always welcome. Nice to see you. Thank you very much for coming to see us. We appreciate it. Emily Turner, HSBC Innovation Banking UK CEO. What have we got coming up? Defence tech is another part of this story as well. We'll turn our attention to what is happening at NATO. President Trump heading for the NATO summit is taking place in Turkey. Obviously, we are watching this very carefully on a number of fronts. Clearly, the story around Ukraine is part of that. We think there's going to be a meeting with Ukrainian President Volodymyr Zelenskyy. All of that to be discussed next. This is Bloomberg. Welcome back. 48 minutes into the equity market session, and Europe is actually a little higher than we first thought it would be this morning. You've got anything between kind of 0.2% and nearly 0.5% in terms of the upside that we're getting. There's plenty of M&A out there that we're folding into the narrative as well this morning. Defence M&A in France. You've got the Easyjet narrative playing out in the FTSE 250 as well. So there's some interesting themes running through the market as we await the arrival, the sort of re-emergence of the United States. Tom.
Yeah, with Nasdaq 100 futures pointing up by more than 1% right now. Let's look ahead to what else we are watching throughout today then and this week. Later today, the British Chambers of Commerce quarterly economic survey will come out on Tuesday. It is the NATO summit starting in Ankara. There's also the Paris Court of Appeal ruling in the Marine Le Pen trial, potentially very significant for the politics of France. Samsung earnings as well on Tuesday, significant for the chip story. And on Wednesday, UniCredit will announce the results of its extended tender offer for Commerzbank. On Thursday, EU finance ministers meet in Brussels. The UK Prime Minister nominations open as well. And on Friday, SK Hynix makes its Wall Street debut.
Let's return to the defence theme, which will run throughout this week. We are working our way towards a NATO summit. President Trump is travelling to Turkey to confront wary allies and meet with the Ukrainian President Volodymyr Zelenskyy about ending the war with Russia. Tensions are high due to friction over European defence spending, the war in Iran, and President Trump's persistent interest in acquiring Greenland. Let's head to Ankara now, where Piotr Skolomovsky is our Central and Eastern European team leader and has decamped there to cover the summit for us. Piotr, good morning. So what can we expect then from the talks with Zelenskyy? This comes with some baggage, some history, as we know, but I think many European leaders would like to see plans made to return some focus to the Ukraine conflict.
Good morning. Yes, indeed. So Zelenskyy is going to meet Trump when both of them arrive for the NATO summit tomorrow. Zelenskyy has basically two goals. One is obviously he wants to get the peace process started. We've seen that because of the war in Iran, the talks have pretty much stalled. So there were no talks. Witkoff and Kushner were busy trying to negotiate the other peace plan. And right now the idea is let's sit down and try to resume those talks. Whether that's going to happen, it's not very clear at this point. Trump talked to President Putin over the weekend, and obviously, but it doesn't seem like Russia is ready to negotiate or ready to actually give up anything or talk about any concessions. Another thing that's really pertinent and really urgent for Zelenskyy when he meets Trump is air defenses. Ukraine has just went through a very massive strike overnight from Russia, a second one massive strike in less than a week. This time when we look at the numbers, in terms of the ballistic missiles, they intercepted literally zero, which means air defenses have really been depleted, and they rely on US-produced Patriot missiles to shoot down Russian ballistic. There's no better weapon to actually shoot down Russian ballistic missiles. So he will definitely push for US to provide them and push for other allies to chip in as well. And he's already been talking about this morning, that this is a topic that he's going to not only talk to Trump about, but also to other European allies who apparently have those US-made Patriot missiles in their stockpiles.
Yeah, building them is the huge bottlenecks in building those Patriots right now. Piotr, let's talk about 5% defence spending. How fast do the Americans want Europe to get there, and how fast is Europe capable of getting there?
Well, of course, Europe literally has no chance. Well, they have no option not to get there, because at this point, Americans are obviously the goal is to get to that point by 2035. That was the agreement at the Hague summit last year. But what we're hearing from the Americans recently is they want this to happen quickly. Some allies are definitely over the line, and they are ahead of the schedule. We talk about the Baltics, Poland, where 5% has already been reached. With others, it's more of a patchy picture. But as I said, I mean, there is really no choice in front of Europeans not to do that, and not to do that quickly, because we're already seeing very clear signs from US that it's pulling out of Europe. First of all, they're reviewing troops, so over the next 6 months we'll know how many troops are going to stay in Europe. Secondly, we've already seen signals of, for example, capabilities being reduced when it comes to forces that NATO has in terms of a crisis, so that's where US is also pulling out. And they've already said that they are not going to deploy long-range capabilities or long-range strike capabilities to Germany, which was planned for next year. So all of that shows that Europe has really no choice but to go to 5% as quickly as they can.
Going to stress a few budgets. Piotr, thank you very much indeed. Piotr Skolomowski joining us from Ankara ahead of the NATO summit. Let's turn back to what we see in markets this morning. Joining us now, Skylar Montgomery-Koenig from our MLIV team. Good morning. You're still interested in the yen?
Yes, absolutely. I think it's quite interesting because it's well appreciated that authorities don't want a significantly weaker currency and that the currency is kind of stuck between this weak fundamental backdrop and intervention on the other side, with the bias just being the slow drift up as people continue to use it as a funder, as volatility is low into the summer. But I think what's maybe underappreciated is that authorities also don't want a very strong yen or a sharply stronger yen. And the reason for that is that it's detrimental to the equity market, right? If you have a stronger currency, that means that exports are more expensive for foreigners buying it. It means your equities market's more expensive. And it also means foreign earnings, once translated back into the yen, aren't as strong. And there's been a very big push to support the equity market, and it's been very effective. I think the other bit is that it's just inflationary. And so, we're looking for what pushes it lower or higher, and I think the path of least resistance is just kind of this slow, boring trend, which maybe isn't as exciting.
Would you go as far as saying managed depreciation of the yen?
I think, that's certainly the direction that we're looking at, in that all of the policies seem to be wanting to support the equity market in terms of this kind of structural push that you've had for equities to not have as much cash hoarding in Japan, to have return on equities. And it means that you have this shift that Japan's going a different direction than everyone else, where, for example, the U.S. has this increasing demand for capital, but Japan is increasing buybacks, it's increasing dividends, and that's a structural support that the government's pushing for.
This is still a big change that's unwinding quite slowly, isn't it, Skylar? When the BOJ started hiking rates, a lot of people said this is a big moment because the carry trade has been this cheap source of funding for so many in global markets for a long time. And you thought that gap might close quickly, but then actually the gap has been, it hasn't closed that quickly, and there's still big interest rate differentials between Japan and the United States. So it's sort of a story that keeps on. We keep on talking about it. It doesn't go away.
Yeah, I think part of it is through the 2010s, you didn't have big interest rate gaps. You didn't have carry as a consideration in the same big way that you do now. But if you think about it, if I'm a foreign investor buying Japanese stocks, buying Japanese bonds more likely, if I am buying in dollars, then the differential is in favor of me hedging that flow. And so it's the same way if I'm a Japanese investor buying stocks abroad, then it's very much against the yen because it's a 300 basis point hedge that you're having to pay. And that's a big difference. And I think it's something that's underestimated as well in terms of currency performance that we're seeing, in that the pound was the best performing currency in the second quarter, and that's very much supported by high policy rate, and it seems unlikely that changes anytime soon.
Okay, Skylar Montgomery-Koenig, thank you very much from our Markets Live team. Talking of the pound, makes me wonder if anybody is working in London this morning.
I think we should play an extra 12 minutes here, to be honest. We're coming to the end of the show. We'll just do an extra.
I mean, I'm doing the pulse anyway.
As fraught as those 11 to 12 minutes.
It was meant to be 11, felt like 12. Felt like half
historic victory.
Yes.
Mexico.
Anyway, Anna is playing extra time.
I am playing extra time, yes. Portugal and Spain's on later as well. Just public service announcement. The Pulse is next. This is Bloomberg.